Hello, welcome to the weekly technical analysis review for Monday, April the 8th. I'm Raf Boyajan, currency analyst at xm.com. Today we're going to be looking at the pound dollar, the euro yen, and the US500 cash index. So let's get started first with the pound dollar pair. We can see, looking at the momentum indicators, that the near-term bias is negative. Stochastics are pointing downwards, and the MACD has turned negative below zero and is also standing below its red signal line as well. Looking at price action at the moment, price action is hovering just below the 50-day moving average. We have seen the 200-day moving average acting as an important support level of the past couple of weeks or so, the past month in fact, and if that support level is broken at the moment, it is around 1.2975. We could see the pound dollar falling towards the 1.29 handle, which is the 50% Fibonacci retracement of the up leg from 1.2424 to 1.3381. Dropping below the 50% Fibonacci would open the way towards another critical level. That's the 1.2790 area, the 61.8% Fibonacci. And below that, we could see prices falling further towards 1.2630. That's the 78.6% Fibonacci. To the upside, which at the moment it's looking difficult to see a strong upside drive anytime soon, but prices will need to break above the first at the 50-day moving average around 1.3095, and then we've got another critical resistance area, that's the 23.6% Fibonacci at 1.3155. If prices are able to overcome that resistance level, we could then see pound dollar being able to aim towards the 9 months high 1.3381 we saw back in early March. So let's now turn to the euro yen pair. It's looking fairly neutral in the short term. RSI is flat around 50. Stochastics are also flat, though they are in overbought territory. So that does suggest that the next move is more likely to be down, given that it's looking the current upside is looking overstretched. Price action is inside the Ichimoku cloud at the moment, with the 50-day moving average and the 38.2% Fibonacci retracement of the down leg from 133.12 to 120.38 acting as a strong resistance. If prices overcome that resistance region and break above the Ichimoku cloud, we could see prices being able to challenge the 126.75 level. That's been a strong resistance, was a strong resistance back in March. It is the 50% Fibonacci, and breaking above the 50% Fibonacci would be able to put the pair on track for more convincing upside break, and the next target will then be the 10-week high of 127.49. To the downside though, we do have an important support level. That's around 123.93, the bottom of the Ichimoku cloud, and it's been a strong support area in the past as well. If prices were to drop below that level, we've got another support level nearby at 123.40. That's the 23.6% Fibonacci, and losing that support as well would then put euro yen on course to head back towards that 20-month low 120.38 we saw at the beginning of the year. And finally, looking at the US500 cash index, we can see prices are moving towards their all-time high. At the moment, the nearest resistance is the 200% Fibonacci extension of the down length from 2,819 to 2,721. So that is around 2,917, and looking back at price action back in the August of 2018. So that level was also a strong support and resistance during that period, and then not too far from that level is the all-time high of 2,940.70. If the index doesn't manage to hit a fresh record high. So the next target above 2,940 would be the 261.8% Fibonacci extension. That's at 2,978. To the downside, though, we could actually see some downside in the near term. The momentum indicators are in overbought territory. The nearest key support area is likely to be the 20-day moving average at 2,836. Below that is the 50-day moving average at 2,782. That's also the 61.8% Fibonacci, and then followed by the 200-day moving average at 2,759, which is also the 38.2% Fibonacci. So that's it from me. Thank you very much for watching, and have a great day.